Okay, good morning, ladies and gentlemen, and welcome to the Financial Juice live morning briefing with your host Tony. So let's start off the day by just looking at some good positive news coming out from China. China reports zero daily deaths from coronavirus for the first time since January. Now, this is seen as a milestone. China reported zero new deaths since January, despite struggles with ongoing outbreaks, including in Wuhan, where dozens of residential blocks have been down just one day before travel restrictions were set to be lifted. Of course, for the market's point of view, it's a positive sign. Also, as the coronavirus narrative plays out, of the situation plays out, this is, as I said, a positive sign not only for China, but also for the rest of the world. Now, it's taken them about 2 months and a bit, nearly 3 months, to overcome this coronavirus battle in China. So what we're hoping for is that we'll see a similar situation not only in the Italian region, in the European epicenter, but we'll hopefully see more numbers dropping off of coronavirus cases. Now that has happened. We're still seeing continued increase in UK figures and also US figures of coronavirus cases and deaths. But on the flip side, you do have positive news coming out from Italy. And I tried to show this yesterday, but Italy, there are no more. There is a peak as to the new coronavirus cases that are coming out as well, and hopefully we'll continue to see that decline in the number of coronavirus cases. So if we just take a look at some other bits of news. So from a Reuters article, Japan declares coronavirus emergency and approves nearly $1 trillion in stimulus. Now, the state of emergency gives authorities more power to press people to stay at home and businesses to close, and this will last through May the 6th and be imposed in the capital, Tokyo, and 6 other prefectures or other regions within Japan. That's accounting for about 44% of Japan's population. Again, expect more of this sort of stuff coming from other nations as well, taking action not only to provide a stimulus to businesses and provide money, but take these aggressive lockdown measures, draconic lockdown measures that we've seen in China, not to the complete scale as we've seen in China with a complete lockdown, but again, now Japan, of course, is taking this on, and they're now doing their bit to curtail the coronavirus as much as they can. Now, also other bits of news as well from a CNBC article before we get to before we get to the charts. Also from CNBC article, the Flight Centre CEO Turner for Australia says that domestic travel in the US and Australia and Southeast Asia could resume by June. And international travel, meanwhile, could be on hold for another 6 months. So this is as expected. So any airline stocks or any companies that use airlines to transport their goods and services, their goods to in and around a country and also internationally, they've got quite a long wait. This makes sense. Of course, if China has taken about 2 months to get their situation under control before they started opening up to foreign nations, then we should expect the same thing from other nations, particularly in the US as well. Domestic flights are still, they're still not going. There's not a complete. There is essentially a lockdown within the US on flights, but you're not getting that consumer demand as you normally would do during or pre-coronavirus crisis hitting the US and also other nations as well. So that's just one thing to keep in mind. Airline stocks, if we just have a look, if I just take a look at, let's say, American Airlines, ticker AAL. Let's have a look and see where they sit at the moment. So here we go. So American Airlines, that continues to see a depreciation in value as the amount of people looking to book flights domestically and also internationally drops off, and this is what you get in terms of just looking at airline stocks. So if American Airlines, this one of the largest companies in airline wise, once they start to drop profit in value, you should also expect other smaller airline companies to be hit quite hard, and that's what we're seeing here at the moment as well. Now, other bits of news as well. If we just get off of that before we go, and let's take a look at the VIX quickly as well. So VIX currently sits at around 45. Spot 24, which is down from its high point from around last week, or from the 18th of March, where we got to around 84 spot or 84, and that was something that was where we saw a lot of market turmoil. We're not seeing too much of that now, of any market turmoil. That uncertainty is depreciating. Now remember, a figure above 30 shows that there is some market turmoil, and that there is uncertainty, and the higher that is, the higher the impact that will have on financial markets. But we're not seeing that so much as in this current situation now. As we can see, the US futures, we go to US futures, the S&P 500 or the ES, that's continuing to move towards the upside. That also, if we just take a quick look at that, percentage wise, that is up to, well, today by over 3%. Now if I just go onto a higher time frame, we go to an hourly, so then we can capture how much movement we've seen in the S&P in the US futures altogether. Just have a little grab here. Okay, here we go. So over a 25% move is what we've seen here. A positive, strong movement back towards the upside. Now remember, we still have quite a way to get back to a point here before 19th of Feb. But what we can see here, it is now markets are being hopeful, and this is one off the back of the number of coronavirus cases decreasing within the European epicenter in Europe and globally as a whole. There's where countries are reaching their peaks, besides the UK and US, but the market's reacting in a positive way, and this is what we're continuing to see, and possibly going to continue to see for the next month or so, until we start getting more negative data coming out from the US. Not just negative data for economic releases, but also the number of coronavirus cases and the mortality rate. So do expect that this rally that we're seeing here at the moment of over 25% now, that could potentially move back towards the downside. Now what I've drawn on here, as you can see, I've just drawn the relative strength of the ES, and this is just to keep in mind where we sit at the moment on the ES, and in regards to looking for any breakout areas or breakout movement. We do see here that we did break below this trend line here, and we did hold it around here, but we quickly moved back into this area. So be cautious, just be careful that in this area that we see here, if I just draw this little line, maybe that's just a little bit, let's draw that a little bit thicker. Hopefully you guys can see that clearly. Okay, so in this area here is where we saw the ES or the US future, the S&P 500 break its trend line of continuing its upside movement off of the back of the coronavirus hitting the markets, and not only hitting the markets but also other economies as well. So we're just keeping an eye out for that we could potentially create a new lower high, and then we could continue our movement back towards the downside. As that's what my view is of the market. So we'll get back to a certain level, but the impact of the short term impact of coronavirus having countries going into effectively lockdown and not being able to go back to work as soon as they would like to, and jobless figures coming out really high as people are staying at home, and also NFP figures not coming out in a positive way, of course, off the back of companies not looking to hire any new people to save money, to keep themselves protected from the impact of COVID-19, and trying to and not losing any money. This is where we're seeing the ES. This is where we're going to potentially see the ES just take a little bit more of a bump before we see a continuation of a movement back towards the upside. So if we go back to 2008, this is what we've seen here, is where we did, so during the financial crisis, we saw a continuation, this market capitulation here, where we saw everything, or this risk-off environment where everything sold off, as people not, first of all, so the stock market, if we're talking about housing stocks and mortgages as well, market correlation wise, intermarket correlation, you saw not only bond prices rocket, but you also saw depreciation in the value of US futures. We're not seeing that here in the current situation, but this is quite important here. This is something that's interesting. Even though we're on hold at the moment, and some Fed members, such as Fed Daily and Fed's Kashkari, who is a voting member, have said that we're effectively in a recession. This is a short-term thing. We're likely to see a huge rebound, as I said, as U.S. Treasury Secretary Mnuchin has said himself, and also Kudlow and Trump and the administration have said that we'll see this rebound in the U.S. economy, and we'll see a continuation of U.S. futures and stocks moving back up and seeing a huge appreciation in value as more and more companies come back into the fold and decide to open up their companies again. Now, if we take a look at other bits of news as well. So, from a Politico article, let's bring that up for you here. Let's have a look. From a Politico article, there's his face. Trump's Hail Mary drug push rattles his health team. Some health officials see Trump's promotion of hydroxychloroquine as an effort to make up time lost early in the coronavirus outbreak. Now, we had Trump's press briefing, as he usually holds every day, in the evening, saying that this drug hydroxychloroquine is something that we're just going to push and push and push. And his own quote saying here, "What do we really have to lose?" I mean, okay, fine. You don't have too much. You don't have too much to lose, because on the one side, you're putting out a drug and trying to keep everyone hopeful. But if your head of the NIH, Dr. Fauci, the top official, says and repeatedly warned in public and private that there's no definitive evidence that exists about the drug, then it doesn't really bode well for the US in this context of coronavirus. Why put out a drug, an old drug that's been declassified, classified by the WHO and also the top US official for the NIH, as a drug that has no evidence of working to combat the coronavirus. This is a malaria drug. It was talked about by the FDA in the US, but again, it wasn't so. It wasn't so. It wasn't so. That argument wasn't as strong, and we can see here the argument has dropped there of the US being seen as, or the hydroxychloroquine being seen as an effective drug. If we go back to the charts, and just bring up another article for you guys. Okay. Also from Bloomberg, Germany plans to tighten rules on foreign takeovers. So Merkel said that the government plans to bring in new rules to protect German companies from takeovers by entities based outside of the European Union. That's a clear thing that other European countries are also looking to do, such as Italy as well. They're looking to protect their industries that are hard hit by coronavirus. So you've got to think about car manufacturers, those sensitive industries that rely on transporting and exporting goods and also importing goods to build their cars that they need to build. And this is something that's a positive thing where not only Germany is taking a stand against protecting its companies, but also the rest of Europe as well. You should see that in other global countries trying to protect their country's interests as well. Otherwise, if you get countries taking over other nations' companies, then and after the coronavirus pandemic clears away, then it leaves those companies in a big predicament. If they have foreign interests, then that doesn't give them it doesn't give them control, and that could lead them to a further darker path, where those companies might be laid off and replaced by other foreign nationals that are not beneficial to helping that company stay afloat, or not what the original company, is looking for in regards to employees. Also, just taking a look at some final bits of news before we get to our 8 a.m. start. Oil rises as hopes build for global production cut. This is a CNBC article. Now, you have Russia and Saudi Arabia and other nations that are looking to work together to cut output of oil globally by 10 million barrels a day. Now, if we took a look at the market reaction, let me just bring up WTI crude oil. Okay. So WTI crude oil, that did see an appreciation on April 6th. So yesterday we did see an appreciation, but now we're seeing continuation of a movement towards the downside. So even though we're up by 1% now, there is still some negative sentiment that's still here, as we can see on an intraday chart. This is what we see, and the only reason why we're seeing that happen is one, because the US still hasn't agreed to cutting output, particularly from Trump's point of view. So oil prices are holding their ground, with market expectation building on an agreement for 10 million barrel a day output cut. That's according to BNP Paribas analyst Harry, who told Reuters Global Oil Forum. Now, the only issue is that Trump said yesterday that OPEC had not asked him to push domestic oil producers to cut production to buttress prices. He also said that the US output was declining in response to falling prices. So Trump is just saying here, well, the demand for oil is decreasing and we're not producing as much oil, and we're kind of already doing our jobs. Really, we don't need to jump on. We don't want to be bullied by you guys to cut even further. And here's the thing: with last week's EIA data, we did see a huge build in crude oil inventories of up to around 12 million barrels per day, or 12 million barrels from EIA crude oil inventories. But again, to see a positive, sustained movement in WTI crude oil prices and crude oil prices as a whole, we need to see a joint action by not only the US, by not only Saudi Arabia and Russia and other OPEC countries and non-OPEC countries such as Norway and Brazil. We need to see a continuation of positive sentiment coming from the US as well to try and join in and curtail the falling WTI crude oil prices. This is where we sit in terms of level wise. So we do have a key level around here, around $25 and 73 cents a barrel on WTI crude oil. We did, if we just also have a look, we did, we checked last week, we did get to our 18-year low on WTI crude oil. But here we go. This is the bigger picture. We're still seeing, we still see a lot of selling going on here. There is a little bit of market, there is a little bit of buying, but not as much as this sharp decline in WTI crude oil prices falling off. Now, if we compare if we compare the Dixie to it, this is the market intercorrelation. Now, usually as crude oil prices fall, the dollar appreciates in value, and as crude oil appreciates in value, that makes the dollar weaker. Of course, as these companies, US companies, are exporting goods and services and also importing goods, then it makes it harder for them to export those goods if oil prices and also companies using oil to create goods and products, it makes it harder, it makes it more expensive for them to do that. So this is what we see. We do see, if you're looking at intermarket correlation wise, crude oil inventories, crude oil is depreciating in value as the Dixie continues to appreciate. And you can see that as a clear sign here. So if I get it onto a weekly chart and we can see just a little bit more, here we go. So as came back to 1985, we can see the dollar was still king, and it was crushing crude oil. And then we saw, as we saw, OPEC decide to take some crazy action. We got to prices around $147 a barrel. This is where we got to our low point on the Dixie. So just to keep that in the back of your mind, as crude oil inventories increase, or crude oil increases in price or decreases in price, the dollar appreciates in value as crude oil depreciates in value. And then Dixie, the vice versa, the dollar depreciates in value as WTI crude oil appreciates in value. So that's one thing you just got to keep in mind as to what's going on in the markets. Not just all this cash is king, yes, but you've also got to see what else is being affected during this coronavirus outbreak. Okay, that is your market morning briefing. Thank you for listening. Apologies if you're struggling with your connection. This is the world that we're living in now, where everyone is using the internet. But hey, we're still here. Thank you very much, and we'll catch you very shortly. Thanks.